Hello and welcome. You are watching Last Tick here on News9, where we bring to you the day's action on Dalal Street. I am Suyash Maheshwari, and let's talk about markets because after 3 days of directionless trades, markets were finally able to find some sort of a mandate, and unfortunately it was in the favor of the bears. Now we started the day marginally higher. Nifty was opened around 22,200 mark, but bulls, they pretty much looked exhausted right from the get-go. They only were able to take markets higher marginally, and now the exhaustion from them allowed bears to take charge of the market, and they capitalized in a big way. Now Nifty gave up over 250 points from the day's high and even broke below the 22,000 mark after a gap of almost 9 sessions, and it ultimately settled below that as well. And I mean, on top of it, I think the provisional close for the index was very close to the day's low, and the index essentially made a bearish Marubozu candle, which is an extremely bearish signal for the markets. It although there was a very small upper wick and a lower wick, by the provisional close it was looking like a Marubozu candle, and that perhaps indicates that there was so much selling pressure that market participants were actually selling at every price point during the day. Now Nifty at close was down over 1% and managed to settle just above the 21,950 mark. And I mean, if you're looking for positives, there are few, but the index did manage to respect its 20-day moving average on a closing basis, and that has been a crucial support for the index since the start of the February series. And if you look at Sensex, that settled with a cut of almost 800 points, and the 30-share index ended marginally above the 72,300 mark. Now, what led to today's price correction, one may ask? And first, of course, it was a heavy sell-off. It all came from just 3 stocks: Reliance Industries, ICICI Bank and HDFC Bank. Then there was this big sell-off that we saw in bank. The banking index on the whole has a weightage of about 30-35% on Nifty. So if bank Nifty takes a beating, it has big implications on Nifty as well, and that was the case today as well. Plus, you can blame some of this correction on the FNO expiry for Bank Nifty, which was today, and I mean, broader markets, because if you think headliners took a beating, hold your horses, because the broader markets, they were market breadth heavily in the favor of the bears now. And if you look at the buying sectors like your PSU Bank, Realty, and to get some idea what and how the markets would react come tomorrow, which is of course the expiry of the February series for Nifty. Let's bring on board Mr. Kranti Bhatini of Wealth Mill Securities. Hi Kranti, thank you for joining us here on News9. Always a pleasure speaking with you, sir. I mean, what are you making of this correction, the massive sell-off we saw today? 22,200, we opened somewhere the get-go, we corrected by about 300 points, broke below 22,000. Has that put the ball back in favor of the bears, you think?
Yes, Yash, we have been witnessing some kind of weakness for the market at the higher range. As you rightly mentioned, 300, that's where the market has been not able to get a further kickstarter to range. And what we are witnessing is a completely range bound in the nature of the market. And today, there is no solace for the market. Market have been coming down in all segments of the market. It can be the large cap, mid cap, and small cap. Look at the advanced decline ratio. It's a broad-based sell-off. We witnessed it today. So this is just the beginning of the correction, or it is going to accentuate further. We need to wait and watch, but there is a strong liquidity is waiting on the sidelines. I can expect a rebound in the market probably from here onwards. post the expiry. But going ahead, what we can see is by and large, so Yash, it's going to be by and large a stock-specific action and sector-specific action is going to take place. Probably the index action might come down. It is by and large we are going to see a consolidation in the headline indices is concerned in a medium to short-term basis.
All right, and does that threaten the expectations of a pre-election rally that all of us, most of us at least, are factoring in, back in December, after the election results came out? I mean, if you look at the performance of Nifty in 2024, it's up about 1% or so. We have underperformed global markets. US is up somewhere around 7-8%. Japanese markets, they are up almost 20%. And FII action, I mean, they have been net sellers to the tune of almost $3.5 billion. And this was before today's session. We'll, of course, get the numbers in just a bit now. And I mean, broader markets, as you rightly pointed out, they have started underperforming. And even the unilateral rally that we were seeing in some of the PSUs, in the last 12-15 months, that has come to a complete halt. So what's your sense of things, sir?
Yeah, so if we witness the data, and what we are witnessing at this point of time is we witnessed a humongous rally. Very few pockets underperform. By and large, it's a secular, strong bull market. What we witnessed in the past 1 year. So right now, what we can see is some kind of profit booking that's taking place as the markets are in a consolidation phase. People who are sitting on a higher amount of profits, they have been booking profits. Today, there is one exception that the follow-on buying is not coming. So people are in a wait-and-watch mode right now. But I'm sure there is a humongous amount of liquidity that has been waiting in the sidelines. So any dip that comes, definitely that money is going to again channelized into the market. So nothing to worry at this point of time. The trend is in a complete uptrend, and these kind of knee-jerk reactions do come in the market because of the humongous rally what we witnessed. So after witnessing a strong rally in a couple of months, what we are witnessing is some kind of consolidation phase right now. Overall, it's going to be by and large stock specific. So as one thing one need to keep in mind, the stocks which have been flying without any fundamentals or without any earning visibility, right, that's where the pockets one need to be a little bit cautious. But wherever there is a clear-cut earning visibility and the stocks are in a momentum zone, definitely one can hold on to their position.
Actually, I wanted to touch on some of these high-flying sectors and stocks that you just mentioned. And I mean, if you look at today, PSU banks, realty, auto, all of them which have done phenomenally over the last 1 year, they gave up about 2% or so. So what should be the strategy over there? I mean, should we, use these corrections to add positions or just wait and let the dust settle here?
So there is no hurry to jump and add the positions at this point of time. In fact, if the investors are sitting on a humongous profits, if they are sitting on 100% kind of profits, it's better to take some profit from the table and remaining stay invested. And if the correction some more deepens, that is the time one need to enter in a staggered manner. But there is no hurry to jump and buy at this point of time at this juncture. It's by and large very stock specific shares at this point of time.
Any particular sector or theme where you are seeing value at this point, sir?
So actually, it's a very interesting question. As you mentioned, where is the value? And in this market, identifying value, we need to have a microscope here. By and large, everywhere the valuations are stretched, and wherever the earning visibility is strong, the earning visibility is already factored into the current stock prices. So the value finding, or you can say the value buys are very limited at this point of time. And this is a market where high PE multiple stocks have become higher PE multiples, and the stocks which have very rarely not performed, they still remain not performed only. So understanding the value matrix at this point of time is very difficult. So as we have been on the job day in and day out, but identifying the value buys is a very difficult exercise at this point of time. But still, given the point of time, given the earning visibility of the sectors, be it in the defense, it can be in the railways, these valuations look stretched, but any kind of meaningful correction in these pockets, one can take the entry into in a very staggered manner.
All right, fair enough. I mean, but I mean, I also wanted to pick your brains on Vodafone Idea. I mean, what are you making of this 14% of correction that we saw today? Because one would imagine that the fundraising plan that the company has come out with would provide, you know, a new lease of life to the debt-laden company. But, you know, I mean, and it would help it sustain in an industry that is seemingly transitioning to a duopoly. But investors are just not convinced. I mean, the plan, it seems, even though it's in the right direction, is just not good enough.
Yes, the news has been coming on and off, the infusion of the fund. So the market has already discounted the fund infusion news already into the price. And given the kind of today's the sell-off, what we witnessed in the market, especially in the mid and small cap space is concerned, so the news has not entered the market. The excites the market over a period of time, the profitability, the growth, and increasing the ARPU, and also increasing the subscriber base. Funds rising the equity is just like giving oxygen to oxygen to the company which is suffering, and which is what we can call is as
Price of about 13.65. I mean, the stock has of course been a multi-bagger over the course of a year, but at the current price, would you be a buyer, sir?
Definitely not. Respect to the company prospects are concerned. At this point of time, it's a risky bet in terms of the fundamental strong portfolio stock is concerned. One can take a chance. At 5 rupees, the stock at 10 rupees. Of the investors, but by and large, as a portfolio constructive for some time, one can take the position with a strict stop loss. But in
that's the word coming in from Mr. Kranti Bhatini. Still, Vodafone Idea is in a of the company are going to be. I mean, this fundraising plan may, you know, enough. That's the word coming in from our expert, Mr. Kranti Bhatini. Sir, always a pleasure speaking with you. Thank you for great insights as always.
Thank you, Suyash. Always my pleasure.
And that's all we have in this edition of Last Tick. But stay tuned as we'll be right back with Business Plus.
इंडिया जैसे है ना, वैसे ही एक मूवमेंट चलना चाहिए, मेड इन इंडिया।